Silver still has a really strong price chart. We could look at the most recent kind of pause and pullback, and it is pointing to a fairly significant move. The next kind of measured move is up to around 63 dollars an ounce from where that is. It's consolidating like gold. It's just more volatile. It's a smaller market, moves faster, but there's potential for a fairly explosive 27%. I do think it could go even higher than that, depending on how you want to draw some of these levels. Like, this is the most conservative approach. The most aggressive one based on the charts would be right around here, which is kind of around 71. And of course, if we do get into this feeding frenzy and it starts to get up there, this is where we go into these blow off top phases where it hits 71 and it can just spike and blow right on through it up into the 80s, because it'll be a big wave of FOMO of everyone piling in right near the peak, and it just, price goes straight up. Gold is taking a breather. I mean, it's doing a beautiful stair step price action where it rallies up, it pauses, it has these huge, massive bull flags. And at this point, it really is just in another consolidation. We did a trade on gold that was just a quick 15%. Pretty much we got in, it ripped straight up, hit our target, pulled back. And then we had this extreme FOMO wave in the market where whoever wasn't in precious metals or gold during this like 1.5 week window, they had to get in. And I mean, the sentiment was insane. I've never seen so many people panicking to get in and saying they bought in, and all of this stuff. And then of course, usually when everybody's running the same direction, this is like our FOMO indicator. Usually it's going to have a quick pullback and try and shake everybody out and scare them. And it's done that. Now there's a lot of people out there saying, has silver put in a top? Has gold put in a top? Or miners topping? And it's funny because we ended up having a small gold trade to get in, and people didn't want to get back into gold. It actually scared them that much. They go from needing it, the previous week, they had to get in and they didn't care, they're paying all-time highs, to now I don't know if I want it anymore. And it's the same that we saw when you and I are looking at the NVIDIA chart. In the morning, they had to have it. By the end of the day, they didn't want anything to do with it. And so when we hit these levels, that means the market has to just consolidate, has to trade sideways. It has to work out the bugs, work out the volatility. Anybody who's scared and is getting bored and giving up on gold is going to keep selling. And there's going to be new investors saying, no, I'll pick it up here. This is a correction. This is a pause. I want to buy it before the next leg higher. So I'm still bullish on gold. I think we're going to see potentially the equities market sell off. Money's going to come out of stocks and go into gold and silver and go higher. And I think you and I have shared this chart before in the past. So on the left-hand side here, we've got the S&P 500 that hit all-time highs. And then we had gold, the yellow line up here, starting to have a bit of a pause. And then we started to see the stock market sell off. Well, we've got very similar price action right now. Gold on the right-hand side is today. We've got gold having this pause on the weekly chart. And now we're starting to see the stock market sell off. And if we look at what happened before, the stock market eventually, it has a little bit of a bounce and struggles, but then it starts to break down and it starts to sell off, and it drops about 19%, while the price of gold shot up like 30%. So I think we're very close to the switch being flipped, where people move out of stocks and they pile into precious metals for one big last push higher. And I think there's a big move in gold. I think $5,100 or $5,200 in gold, and silver could be up in the 80s an ounce. I think after that, I think that they're going to have very sharp corrections, but that's what the charts and the sentiment and the cycles, everything we're looking at are pointing to. So I like gold and silver here. They still might take another couple weeks to digest before maybe starting to move higher. I think a lot of it is going to come back down to what the stock market does. If we look back here, we had kind of 3-4 weeks that the stock market had to bounce up. These are the weekly charts. And so gold traded sideways during that phase. Everything was trying to figure out what it's going to do. And then once the stock market starts to sell off, that's when gold starts to shoot higher. So I think you got to be patient with gold and let it just mature a little bit more, let the stock market potentially stall out a little bit more. And then I think we're going to see some pretty big moves in the precious metal space.
Investor behavior has shifted rapidly, from desperation to buy at any price to sudden reluctance after a modest pullback. This emotional swing mirrors classic market psychology, where FOMO turns to doubt almost overnight. Recent examples across tech stocks show similar patterns: aggressive buying followed by abrupt disinterest once price momentum stalls. Such shifts usually indicate the market needs time to digest recent gains. As participants reassess risk, stronger hands accumulate positions while late buyers exit in frustration. These psychological cycles often precede major breakout phases, especially in safe haven assets like gold, which thrive when investors grow uneasy about broader market stability.
Silver still has a really strong price chart. We could look at the most recent kind of pause and pullback, and it is pointing to a fairly significant move. The next kind of measured move is up to around 63 dollars an ounce from where that is. It's consolidating like gold. It's just more volatile. It's a smaller market, moves faster, but there's potential for a fairly explosive 27%. I do think it could go even higher than that, depending on how you want to draw some of these levels. Like, this is the most conservative approach. The most aggressive one based on the charts would be right around here, which is kind of around 71. And of course, if we do get into this feeding frenzy and it starts to get up there, this is where we go into these blow off top phases where it hits 71 and it can just spike and blow right on through it up into the 80s, because it'll be a big wave of FOMO of everyone piling in right near the peak, and it just, price goes straight up. So um, I like silver. I like gold. I'm not as big of a fan of miners. I'd rather just stick with the physical bullion, because a perfect example is we saw on Thursday, we saw the stock market pull back like a percent and a third, percent and a half. But if you go and you look at like silver miners, for example, they pulled back like 5.5%. And so this is the problem. We saw this in 2007 as the stock market started to top and sell off. Is when the stock market tide is going down, it pulls most stocks with it. Even if they're in a strong sector like precious metals, you'd make the same amount or more money in just trading gold than you are to try to take the leverage play in a stock. Because if the stock market falls 20%, it's naturally going to pull the gold miners down and keep kind of them muted. Whereas gold is a physical commodity, it's outside of the stock market. And we saw, huge turmoil on Thursday with Nvidia and the unemployment number, and pretty much all the commodities were like pretty still. Gold barely moved. It was slightly positive. Oil barely moved, because everybody's attention was on the stock market. They're licking their wounds. They're trying to figure out what to do. So it just goes to show that, a commodity is outside of the stock market. And if the stock market is potentially putting in a top here, why not just trade gold or silver? Because it can keep going up if the stock market crashes. Whereas miners are going to have that real headwind and that struggle every now and then that's going to get hit with a wave of selling.
Recent weekly charts reveal a familiar setup. U.S. equity indices pushed to new highs, then began to weaken, while gold paused at elevated levels. This mirrors previous periods when equities rolled over and capital rotated into precious metals. In past cycles, gold accelerated sharply, sometimes 25 to 30%, as stocks retreated nearly 20%. With 2025 market volatility increasing and earnings revisions turning negative, the same pattern may be forming again. Gold's consolidation suggests accumulation rather than weakness, and silver's structure points to potential moves toward the mid-60s or even $70 if enthusiasm spikes. The closer equities move toward exhaustion, the more likely metals become the next major beneficiary.
It's holding up fairly well. I mean, it has a series of rally, pause, rally, pause. It's hard to get a gauge. Like, I think we're going to see all precious metals move higher. You could argue this might be a little bit of a bear flag. We got this move down, and there's potential it might want to unwind and sell off. But if the precious metal space and gold find a bid here, and then I think we're going to see this take off. We saw platinum and palladium and silver all rally over 50% in this similar type of price action scenario just before the last financial crisis. So it's still holding up. I think you should be bullish on platinum, palladium, silver, and gold. But it's definitely testing a support level. It's not quite getting the attention. Like, gold is kind of the ultimate gauge of fear and barometer for that. So it holds up and has the cleanest chart patterns. As soon as you deviate away from gold, you go to silver, platinum, and palladium. They're a little more random. They can give you fake signals and fake breakdowns and breakouts to the upside. And they're not quite the same. They don't have quite the same cleanness to the chart patterns, but they generally will move together. And so if gold moves up, I would expect platinum to rally as well.
Silver continues to mirror gold's trend, but with amplified swings due to its smaller market size and strong speculative component. Recent pullbacks have formed compact consolidation zones that historically precede powerful expansions in price. Conservative technical projections point toward the low $60 range, while more aggressive models indicate the potential for a surge toward $70 or beyond during periods of intense investor demand. Silver often overshoots both to the downside and upside, especially when retail interest accelerates. If gold breaks out decisively, silver could follow with a sharp, accelerated rally, possibly producing some of the largest percentage gains in the precious metals sector.
I think it's going to try and find support right down where it is. I mean, there's no doubt it's getting pretty oversold. It's had a very strong move to the downside. I would say there's a big support range somewhere right down to where it has dipped to. 80,000 is also a whole number, meaning a lot of people will say, well, if it hits 80,000, which is, a level that people just want to say, I'll buy some if it gets there. So it's pulled down into a high volume support zone. And now I think it might have some type of bounce to the upside. I wouldn't touch it at all. I don't like this chart. It's in a downtrend. I don't play bounces within a downtrend. If anything, if it bounces and then starts to roll over, you'd actually want to play to the downside, because after this drop, it's probably going to head on down to, around 50,000 after this one. So it doesn't look very good. From a short-term standpoint, expect it to bounce or trade sideways for a week or three or a couple, or maybe even a month or so. But overall, it's a bounce and it's in a downtrend. So it might not have that big of a bounce. And then once it does fail, I think we're looking at another precipitous fall. So it'll drop pretty sharply. And of course, if the Nasdaq sells off, then this is probably going to move down with it. They're fairly highly linked in terms of how they move.
Mining stocks continue to underperform the metals themselves, especially during equity market turbulence. Downside pressure in the broader indices tends to drag miners lower, even when gold and silver remain resilient. This pattern echoes 2007-2008, when mining shares struggled while bullion surged. Physical metals behave independently of equity flows, but miners are still stocks, vulnerable to liquidity events, margin unwinds, and risk-off selling. For many investors, direct exposure to gold and silver offers clearer, more stable upside than leveraged miner positions. The current landscape suggests focusing on physical metals until broader equity conditions stabilize and miners can break free from market-wide selling pressure.
Yeah, I mean, you and I have touched on this one a few times. I mean, I don't really know the stock. I'm not a fan of any company that just buys Bitcoin as their business model and they're just playing and pumping it and all that stuff. I think that's what's going on. I mean, I don't know. I don't follow it. The chart looks terrible. It's based on a model that I don't believe in. And why don't people just trade Bitcoin if they want access to it? Why do they have to go through another stock or company that's doing whatever knows? And it just adds more guesswork. I'd rather just follow this straight up. So obviously this is getting oversold, just like Bitcoin. It's getting down into a deep support zone of this previous level. So I would not be surprised if we see Bitcoin, if we see micro or strategy bounce from this level. But again, I wouldn't touch this thing at all. If you look at the long-term picture, this to me just looks like a massive double top. And I wonder what the monthly chart probably shows a pretty ugly chart pattern. Obviously, what goes straight up comes straight back down. It's usually never sustainable. It has put in a massive double top. It has broken down. It's into support. So, best case scenario, I feel like it could bounce back up to 240 and then it's probably back down to 80 or 40. I mean, I think it'll be pretty worthless. That's just based on the chart pattern. And again, I have a bias, I guess, because I'm not a fan of this strategy or the stock, but the charts do not look good at all.
The recent turbulence across Bitcoin and crypto-linked stocks highlights the danger of speculation without proper risk controls. Many companies tied their balance sheets to digital assets, only to face severe losses during downturns. As crypto markets revisit critical support zones, extreme volatility continues to influence investor behavior. Gold, by contrast, remains a long-term barometer of fear, reputation, and financial stability. While other metals and digital assets can produce dramatic surges, gold offers the cleanest signals and the most reliable structure. With global uncertainties rising, from interest rate shifts to geopolitical tensions, disciplined investors may find precious metals a more stable and strategic anchor for the months ahead.
I invested in a company a while ago, and they were ridiculous. The CEO was nuts and put all their money into Bitcoin to quickly try to double their money, even against nobody who seemed like wanted it to happen, and it blew up, and they lost, and they went bankrupt. It's unbelievable how Bitcoin gets into people's minds, and they just have to go for the so-called quick money. We'll quickly double or make 50%, and then we got tons of capital and we can do all the stuff we want. They weren't even in the crypto space, and they did it and they blew up. So I I I'm not a fan of Bitcoin because there's so much potential that it makes people do stupid things and risk other people's money and all that. So I'm very risk focused, and so when people don't have risk, I struggle to give them the respect and like I'm just like life is all about measuring risks. It's all about having a strategy and managing risk. You know, we only live once, and you got to protect your life, your health, your financial space. But for some reason, as soon as you put high targets on stuff, and people are saying $1 million Bitcoin, people throw all logic out the window, and they're like, "Well, if this thing only goes half or a quarter of that, I'm going to make a fortune still." But you know, the odds aren't very good that it's going to happen, and so yeah, anyways, that's I guess my chip on the shoulder toward on the Bitcoin side of things is only because I deal with thousands of subscribers, and I hear them always share like this guy's saying this is going to this price, and that's why I try not to put these crazy targets like on gold and silver. Like I'm putting some pretty high targets on them now because they actually look like they're going to happen. But so many people like years ago, a decade ago, were saying 5,000 and they were saying $25,000 gold. And I watch people who listen to these, like they're subscribers of mine, and they're like, I did this and I bought this, and it blows up huge in their face. So that's my rant anyway.